What's up, guys? It's Janice Jackson here with another psychology video. This one's gonna be talking about how our genetics make us unprofitable. Okay, it makes everybody unprofitable. And at the end of the video, I'll explain how we can overcome this and the mental hack that you have to implement every day to combat this evolutionary, genetic, um, I guess, issue that affects us in trading. Um, essentially what's going to happen what I'm going to explain here is that you know genetically we want to win, we want to be right, we want to be the strongest. We don't want to be wrong ever, in a conversation, at a dinner table with our partners. We don't want to be wrong, and it hurts to be wrong, right? That just comes from genetics. And in trading, we definitely don't want to be wrong, and we don't want to lose money. We want to win and we want to be right. That is where our shortcomings come from. That is why we are stay unprofitable, because we just wake up every morning caring about making money. We wake up every morning caring about being right. So this is going to be, hopefully a quick video, going over two articles here of the science behind it. This was inspired by a podcast I watched of this guy, and he was talking about how, genetically, we're wired to lose. So it made me do more research on it, and I wanted to make a video. Give yourself grace. My last psychology video I did, I talked about why it's harder to become a trader versus a doctor, a lawyer, a nurse. I didn't really talk about the psychology part. I just talked about the the structure, right? Doctors have whole 10-year structure of courses. Nurses have the 4 to 5 year structure. Doctors have the 4 to 5 year structure with the vetted teachers, vetted colleges, you know, um, tests and curriculums that have been tried and true for a long time. And trading, we don't have that. That's what I'm trying to do here at GNS Academy. Go on the YouTube here. There's an A to Z educational series from the beginning of trading and how it started and all the way to the end. Okay. And like, and buying a prop firm. Okay. And everything in between. You should be able to learn how to trade based off of my A to Z series. Um, so that's the structure I'm trying to offer. That's one point of it, though. There's also another point of why it's hard to become a trader and run profitable. It's because of genetics. So let's get into it. Oops, excuse me. Okay. So why evolution makes us bad at trading or at investing? Okay. We'll try to run through this pretty quick here. So in the first section, skip to the fourth paragraph here, right? Okay. So since this guy started at Ridgewood Investments in 2002, and in his prior life as a private investor managing his own portfolio and that of his parents, he was aware that the ability to control and manage emotions is critical to success in investing. That's obvious, right? Like, geez, emotional control, psychology. Everyone talks about psychology and strategy, right? 80% psychology, 20% strategy, right? Warren Buffett even says the same thing. Talks about the importance of temperament rather than just intellect to the achievement of outstanding investment results. It's not about how smart you are. It's not about how many degrees you have and how good you were in school. It's about how well you could control your emotions, your caveman brain. Okay, how well you could handle a loss over if you're in the middle of a long bad trade, or if you just took a loss this morning. Like, what are you gonna do? Okay. Um. Now, over here, evolution works slowly. Okay. The adaptations of our current bodies and minds were developed for survival in a very different environment than the one that we live in today. Many of the inventions that have made life so much plentiful, like money and stock markets, and much of our technology are very recent, hundreds at most thousands of years old, where our minds are mostly evolved for the world the way it looked 50 or even 100,000 years ago. Even 200,000 years ago is when they say like the Homo sapiens were walking. So our brains are still used to building a fire and mating with, the person in your tribe, and hunting for food and fighting off animals. Like now we have, we could order our groceries, we could order DoorDash, the traveling, we could just go on Uber. We have Tinder. It's this super easy now for us to get anything that we want, at the snap of a finger. That also affects us with trading. We want to make money now. We want to be there now. We want to take profit now. And we want to be rich now. But we need to wait. Additionally, the same thing is when we lose. Back then, we could not lose. If we lost, it would be detrimental, right? And that's what it talks about here. We have some behavioral traits that lead us to bad financial decisions. Okay, emotional decision making, loss aversion, overconfidence, classification, and reliance on gossip. Let's focus on number two here. Just how I talked about how back then our brains are used to survival and mating, and needing to win and needing to be right and needed to be the strongest and needed to be the fastest. We needed to win. We had to win against other tribes to survive. We had to win against other animals when we're hunting and another animal comes in trying to take our food. We had to win against them. We had to win in the hunt. We had to win against to mate with women, or other people, I guess, because if you're a girl watching this, then But anyways, um, you had to be the strongest. You had to be the fastest, the smartest. You had to win. You had to be right in order to survive. Now you don't need that. You could be dumb now and fucking survive. Um, ChatGPT, in trading, you could be dumb. You just have to have a good setup and risk management and be a good loser. Okay, and that's what we're talking about here. The prehistoric world was one of scarcity. Our ancestors could not afford to lose. As a result, we evolved to feel intense pain and discomfort when facing with losing something that we have. Yes, it sucks to lose a family member. It sucks to lose a job. It hurts, and that's natural. But when you and it's gonna be natural in trading when you lose a trade. It's just how you respond to it. Okay, I'm going to lose this week. I'm gonna lose next week. I'm gonna win a lot too, but I'm gonna lose. And it's not about what happens when you win, which it is to an extent. Yeah, do you get greedy? Do you win and go back in for another trade? That's another thing. We're talking about losing, right? Genetically, when we lose, we want to avoid losses, and that makes sense. You're going to lose. Get over it. It's how do you respond to it? Do you go back in for another trade? Do you go back in for double? Do you keep on going until you win again? Do you keep on going until you make the $500 for the day? So you're down $3,000, and then now you freaking go all in, and then you make the $500. How do you respond? You have to have short-term memory. The percentage of people that make it in trading are like the percentage of people that become athletes. Okay, and we're trying to make NFL money here. We're trying to make NBA money here. You have to have the NBA and NFL mindset. When you're an NBA player, they have 80 something games in the season. Do you think they care about the 13th? When they lost the game? Do you think they care about the 22nd game when they lost? Sure, what you do is learn from it. Okay, I'm gonna make sure I don't do this. I'm gonna make sure I don't do that. But you're going to lose. Do you think they care? They have to have short term memory and move on. Do you think because they lose a game, they're not gonna make it to the championship or the playoffs? Like you have to have short term. You have that short term memory. Same thing with the football player. 15, 17 games in a season. Do you think he cares when he threw that game losing interception on week 2, or when he fumbled in week 4? They talk about it with the interviewer at the end of the game, and then they got to move on. Monday, they might go over the film, or Sunday afternoon, or whatever, depending on the time. They go over the film, and then from there on, they're ready for the next game. You have to move on with confidence, not overconfidence, but you have to move on trusting that your skill set got you there, okay? And that it'll be okay. Trust the system, okay? You're not going to win every game. You're not going to win every trade. So when you lose, how do you handle it? Do you crash out? Do you crash out on your teammates? Do you crash out on the strategy? Or do you just hold the line? It's a joke that we use here in GNS. Do you hold the line and just keep on going and trusting that eventually the odds will be in your favor? Okay. And number 3 here would be overconfidence, right? Confidence was key for high standing in the tribe. We've evolved to feel confident about things we know next to nothing about, because that same air of confidence made us more attractive to mates. Yeah, in real life, like we always want to be confident, especially as a man. You want to be confident, even if it's something you don't know. Like, yeah, yes, yes, make a decision. Yes, don't be like, I think so, or I don't know. Yes, no, be confident. That's gonna help us with other men and women when mating. Okay, and trading, do not be overconfident. You could take the perfect setup and still lose. Okay, And if you're overconfident and you lose, it's gonna hurt you egotistically, and we don't want to hurt your ego. So, um, you know, don't be overconfident in trading. Be humble. Be grateful that you won the trade today, and then next time when you lose, because you will lose, just be grateful that you're able to trade today, and trust that your strategy is good. Okay, especially if you've done back testing, if you collected the data, and if you've gotten payouts from it, if you've been profitable from it, just trust it. Okay. There's more stuff here like emotional decision making. We don't want to make emotional decisions when we're trading. We want to be nice and clear. Um, and so you don't have any FOMO and stuff like that. Reliance on gossip. People like to hear say, oh, this person said to go for buys, this person said to go for sells. Don't rely on them. Trust yourself. Okay. Classification. Our minds are good at classifying things. So um, our brains consume the max amount of energy in our bodies. So classification helps us conserve energy. I don't really care about that right now, but essentially, we don't want to lose. We're genetically wired to win and be right, right? And that helps us in a lot of cases, like survival. In trading, it's not going to help us. Wanting to win and wanting to be right, it doesn't matter about that. It matters about what happens when you lose, because you are going to lose. It's not about avoiding losses, it's when you lose, how you're going to respond. The second article here is really good. Let's focus on the first quote. Okay, why our evolutionary biology works against us in the markets, right? First quote here. I think investment psychology is by far the most important element, followed by risk control, with the least important consideration being the question of where you buy and sell. Let's break it down real quick. Psychology and risk control is the most important factor. The least important factor is where you buy and sell. The least important factor is your strategy. Now, strategy is important, and you don't want a dumb random strategy. You want something with a checklist, something that's been checked and vetted, and proof that it works. But everyone has a strategy that works for them. Okay. The main thing is when you find that strategy, it's gonna be how you can execute it. Okay. I have a freaking decked out, AR-15 gun or a Glock, and I can shoot it great. I can move around and shoot the target. The target can move and I can move and I can shoot the target. And if I give you the gun, that doesn't mean anything's gonna happen. You might not even know how to load it. Okay. If I give you ICT strategy, it doesn't mean you know how to execute. Um, and so I can give you an AP model, and it doesn't mean you'll execute it right. In the Discord, we all could take the same exact trade that I call out. Some of you guys won't take it because you're scared. They don't think it's a good trade. Some of you guys will take it, and as soon as it goes into a drawdown, you get out. As soon as you feel a little bit of pain, you're out. Some of you guys will take it, and it goes into a drawdown and hits stop loss, and you drag the stop loss down more because you don't want to lose. Some people, when we take the trade and it goes into profit, you'll get out just because you're up $100 and you're scared to lose that. You'll drag your stop loss up to break even early. I have 10 of us took the same trade. Maybe 3 of us let it go to TP. So psychology and risk is the most important thing. The most important thing by far. Okay. Um Now let's see here a little bit more. Um it's been said that investing is the best way for a person to truly understand himself. The markets will quickly unveil every character flaw, insecurity, and weakness that lies inside. This is the nature of the market, and it's why emotions tend to run wild within it. Fear, greed, hope, and self doubt. It takes psychological preparation to manage this barrage. The failure to do so leads to disaster. Okay. To deal with these emotions helps to understand the mind, how the mind originally developed. We talked about this. We're hunter and gatherers. Cities and populations are relatively new, considering the agricultural revolution was only 10,000 years ago. And like I said, trading and computers and Wi-Fi and Walmart and the mall and everything and delivery, that's very, very new. The market and trading on Wi with the phone on TradingView and prop firms, that's extremely, extremely new. You think our brains are developed for this type of pressure to make money out of thin air? It's not. Especially losing money in thin air. It's a dangerous, dangerous game. Okay, let's use a couple of. We already talked about a couple examples like the hunting and whatnot, but let's see here, right here. A tribal man's walking back from a hunt with the food and is confronted by a mountain lion. Amygdala triggers a fight or flight, and now we're hit with various emotions like fear, aggression, anxiety, and we have hormones like adrenaline, testosterone, and cortisol. It helps us fight or flight, and that's necessary. We need that even today in 2026. Um, that's not going to help us with trading. Okay, a man's entire life savings invested in the SP 500, and all of a sudden the market plummets 5%, and then another 6% the next day, and now the man is faced with extreme volatility and huge loss. His financial security is on the line. If he loses his savings, he can't send Timmy to college, and he might end up doing fast food for the next 30 years. It's a life or death situation, and the decision needs to be made quickly. If the same amygdala the same amygdala gets triggered, and the same responses happen of a fight or flight. In this case, it's gonna work against you. This is where you need to be rational and calm and trust. Have good risk management, and um, doing so will be able to help them overcome the genetic evolutionary biology of you know not wanting to feel any pain. Okay, so what is the way we can combat this? I have a small little diagram here that has helped me and helped my students, and it is this. Wait, okay, contrary to popular belief, in trading, it is not about winning and making money. Okay, Eh, evolutionarily and genetically and all that, we want to win, right? We want to be right. Okay, we want to be the strongest, the fastest, the smartest. In trading, we want the same things. We want to win, we want to make money. That's the point of trading, to make big money, right? And it's not about being but it's not about making money, and it's also not about being right. The ego, I'm right today, I won the trade today, I could post it online, I won, and other people get to see. The confidence is good for you, for you, society wise, like peer to peer, but it's not about that in trading. Okay, that is completely opposite of what we are wired to be like genetically. We are wired to win, wired to want to be right. In trading, that will make you lose. Why? If you focus on winning and making money, you're going to wake up every morning wanting to make money, and you're going to be willing to lose everything just to make a dollar. You're going to be down $3,000, and then you're going to take a huge freaking jumbo trade, and then freaking be up $100, and you're going to be happy that you made $100. That is very dangerous. Okay. And it's not about being right. Okay. If you want to wake up in the morning and you want to beat the market, I have to beat the market today. You're going to lose one trade, two trades, three trades, and then you're just going to keep on trading until you finally win. And then you're going to be happy and relieved that, oh, I beat the market. And you might lose a whole account, then deposit more money, lose a whole account, and deposit more money just to win and be right and feel right for the day. It's not about either of those things, and that's against us genetically. All right, that's what we want genetically. It's not about that. What it is about is taking an A plus setup. Is about taking the best setup that we could possibly take. 4 hour fair value gap, 15-minute fair value gap, and then it bounces off. We have a 5-minute inversion with the 13 MA getting broken out. The EMAs are underneath us. We have SMT. We have sell side liquidity taken at the same time. There's accumulation, manipulation, distribution with the ADA macro with the 4 hour candle wick and a market maker buy model. Take that thing every single time. It's not going to win every single time, but take it. Keep on taking it. Keep on taking it. Okay. Take that setup. And it doesn't matter if you take the AP model, the A plus setup. If you don't risk right, what's the point of taking the AP model if you're going to go ahead and freaking risk the whole account? What's the point of taking an AP model if you're going to win that trade and then go ahead and take another random trade, and then now you keep on losing. Okay. Take the AP model, A plus setup, and risk about 1% to 0.5% to 1%. Okay, go for a 1-to-1. Take one trade a day. Okay, that's this is the psychology hack right here. Because taking A plus setups every morning with the right risk management, then you start winning and then you start being right often. Okay. Don't think about winning. Don't think about losing. Don't think about anything of that. Just every morning, if you take an A plus setup and have risk management, then that's the win right there. That's a win. Even if you lose the trade, that's a win. I promise you, if you could take an A plus setup and have correct risk management for a whole month, for 2 months, you will be profitable. The only thing that's stopping you from being profitable is you wanting to win and wanting to make money and wanting to be right. So, um, follow GNS, subscribe, and I'll try to make some more psychology videos.